Welcome to today's webinar, Leasing and COVID-19, Cash Flow Opportunities and Accounting Considerations, sponsored by CoStar. I'm Jess Bazzo and I'll be your MC. Before we get started, I'll cover a few features of the console. On the left-hand side, you'll be able to view slides and polling questions during the webinar. We'll also be able to download a PDF of today's slides by clicking on the link in the resource list icon area. We invite you to ask questions at any time during today's webinar in the Q&A area of your console. We've set aside some time to address your questions following today's presentation. We'll also have the opportunity to earn a certificate for 1 CPE credit. To be eligible, you must respond to at least 3 polling questions, as well as remain on the line for the duration of our session today. Afterwards, if you are eligible to receive credit, you'll be able to click on an icon to download the certificate located in the certification section. Now it's my distinct pleasure to introduce today's featured speaker. On the line today, we're excited to have Matt Waters, Director of Lease Accounting with CoStar. Matt has more than 15 years of experience in lease accounting, including 6 years as a lease accounting manager at the Home Depot. At CoStar Real Estate Manager, he has helped hundreds of companies comply with the new lease accounting requirements under ASC 842 and IFRS 16. He is a frequent speaker at national accounting conferences, industry roundtables, and CPE events. Matt's articles and quotes have been published in numerous media outlets, including our own website on CFO.com, Thomson Reuters, and Bloomberg. It's now my pleasure to turn things over to Matt to start us off. Welcome, Matt. Over to you.
Hi. Thank you, Jess, and welcome, everybody. Thanks for joining us today. And I'm looking forward to talking with you about leasing and COVID-19. We are going to talk about some cash flow opportunities, and of course, as a CPE event, we're going to talk about accounting considerations. Now, first up, I just wanted to start off with this story from the Wall Street Journal. I noticed this. You can see the date was March 31st. So I looked at this early in the morning that day and realized, wow, this is, for a lot of companies, this is the day before quarter end close. And while I work at CoStar now, we provide lease management software and lease accounting software. So I've been doing that for a while, but most of my career, about 20 years or so, I've been in pure corporate accounting, closing the books. And man, everything was pretty much driven by that close calendar. It kind of bled into personal life. I had more than a few weddings that I know of that were scheduled around month end and quarter end close. And I just, looking back over the years, I really could not remember a time where there was ever an acceptable reason to work from home, or work remotely during quarter close. But then all of a sudden this year, here we are, and a lot of folks are still working from home, and so we see the Wall Street Journal here calling that out and saying that the finance teams are adapting to closing the books remotely, and CFOs are relying heavily on automation, and so it's just kind of an interesting reminder there, and something that makes software that much more important, especially cloud-based software that you can use anywhere to close the books. Then next thing I noticed, this came out maybe a month or so later, but I thought this was clever. As an article in Forbes, who led your digital transformation? Your CEO, your CIO, or COVID-19? So again, just an interesting reminder of just the broad-reaching impacts of what we've been going through, and again, just how much more important now than ever it is to have capabilities to close your books remotely, and really spurring a lot of our customers. We see they're being spurred on by this event to either move their digital transformation further along, or perhaps take some of the first major steps toward that. Now, as far as an overview goes, today we're talking about cash flow opportunities and accounting considerations related to leases, and particularly in the aftermath of COVID-19. One of the major items that has been discussed, even at by the FASB, it has been lease concessions, and so we'll spend some time, a few slides, talking about lease concessions. I'll give you some of the latest information on that, and so just overall, the lease concessions have been great. It's helped companies preserve cash, but there are some accounting policy decisions to consider. Then there are other opportunities out there, lease modifications, which can save costs. Then also there are opportunities around lease clauses that can be used to generate cash, recover cash, and also we'll talk about sale leasebacks, which have come up kind of with renewed interest here recently as companies look to preserve and generate as much cash as they can. So we'll talk about that as a topic today as well. Now, I mentioned we're talking about accounting. Of course, the interaction between lease accounting and lease administration is strong. So we'll mention some points around lease administration. We'll cover some software considerations and the way that a lease management software can help facilitate some of these opportunities that we're going to consider. And just to note that today I'll mostly be referring to topics and discussing on the terms of the lessee's perspective. But of course, just for the nature of the industry, if you're a lessor on the line, it'll either directly or perhaps indirectly impact you. But still, I think most of the points will be relevant in some way to lessors as well. But mostly, we'll be looking at everything from the lessee perspective. And Jess, I think that brings up our first polling question.
Excellent. Thanks so much, Matt. As Matt just said, this is our first poll of the day. You'll see it on your screen here. It says, which best describes your understanding of the effects of COVID-19 on your company's leases? The answer options you'll see here are no major impact, business as usual, some leases will be impacted, many leases will be impacted, or still evaluating. Please take a few moments here to select your answer. As a reminder for those attendees seeking credit for today, you'll need to answer 3 polling questions. We'll leave this one up for a few more seconds to give everyone a chance to answer. And once we close this question down, we'll share the results and have Matt make a few comments before diving into today's content. So please go ahead and make your final selection here. And what we'll do now is go ahead and display the results. Let's take a look here. It looks like the most popular answer, Matt, by just a hair with 31%, is still evaluating. Any thoughts about how our attendees have responded to the first poll here?
Yeah, that's pretty standard, I'd say. Thankfully, there are some businesses that had no major impact. You can see 26% here. I will say a lot of companies have leases that are impacted by this. So, that the middle 2 bars there are, I guess, makes sense. And then still evaluating, that's not a surprise really either, because a lot of the ramifications and really the impact of COVID-19 just starting to become apparent at the end of the first quarter. So I think, and certainly at that point, FASB had not issued their relief and their clarifications around COVID-19. So now as we approach the end of the second quarter for most companies, for calendar year companies, I don't think it's surprising that many are still evaluating and taking advantage of a little bit of more time before quarter end to decide what they're going to do. So, yeah, very interesting. Thank you for that. So, moving on into our topic around lease concessions. again, this is really probably the what has turned out to be the hottest topic related to leasing and COVID-19. There's tons of information out there. You can go to any of the big four accounting firms and pull up specific guidance and COVID-19 guides that will mention lease accounting and lease concessions. You can also go to FASB's website and pull up their Q&A document related to leasing and COVID-19. So this is something that's been discussed quite a bit over the last few months, and so really just to set the stage and to give an overview today, the lease concessions involve different types of changes in payment structures, and they're really, a lot of times it's a deferral of rent where the lessee will have the opportunity to pay no rent for a month, or several months, and then later in the lease make up that rent. So that'd be a deferral, or perhaps there's an abatement situation where the landlord has said, you can skip the payment altogether. And deferral is also perhaps sometimes referred to as forgive and extend, where if you get 3 months of free rent now, you tack 3 months of extended term, with rent onto the end of the lease. There's, very similar defer and extend. Short pay is something else that has come into play, and this is typically where a lessee does not have the permission of the lessor, but just due to the circumstances involved, they decide not to pay rent that month because they can't, or they're still perhaps negotiating. There have even been some situations where lessees believe they have a kind of a legislative or policy-based reason not to have to pay rent, in certain jurisdictions. So all of these items have come into play for lease concessions. Another one that I think we'll see perhaps kick in a little bit later is related to co-tenancy clauses, and these will reduce rent based on the actions of other tenants. Generally, this is in a shopping center or mall, but if an anchor tenant leaves or tenancy drops below a certain threshold, sometimes leases have co-tenancy clauses where lessees can receive some rent relief from the lessor because of that. So just another example. And just by definition, or by its nature, lease concession is a compromise that the lessor makes to the original lease terms for various reasons. Of course, in this case, all the discussion recently pretty much has been the reason has been the COVID-19 situation. Now, before FASB offered some relief, lessees were in a bit of a difficult situation, especially when lessees have hundreds or even thousands of leases, because COVID-19 impacted almost every one of them. So broad-reaching. You can imagine if in a disaster, such as a hurricane or a earthquake or tornado, generally that's going to be fairly localized, and you're going to have some leases impact if you're a large company with many locations. However, COVID-19, in many respects, impacted the whole world, right? So this is one of the really the largest example of lease concessions that we've ever seen, and FASB noted that, and their staff indicated that even when they were drawing up the rules under ASC 842, they really didn't contemplate a pandemic like this having such broad-reaching effects. So because of that, the rules as they existed really indicated that you had to have some type of enforceable right to a concession if and it had to be in the lease. Usually this was the force majeure clause, and they just said, in the event of something uncontrollable, the lessee can be entitled to rent relief. And so if that were the case under the existing guidance, the lessee could generally just reflect that as variable rent, or basically take a credit to the P&L during the month that the concession was received, and then just move on with the lease accounting per the existing schedule. Now, that of course that's pretty simple, but that was all dependent on that force majeure clause, or that enforceable right. When that did not exist, the lessees typically had to perform a remeasurement or treat it as a lease modification, and that's a little more involved. You have to reevaluate net present value, get a new lease liability amount, a new right of use asset amount, and even reevaluate some of the key parameters for lease accounting, like the discount rate and other things. So a little bit more involved there. And again, the reason why this became such an issue with COVID-19 is because companies with hundreds or thousands of leases were left scrubbing through those leases, trying to figure out which ones had enforceable rights, which ones didn't, and then considering how to account for the lease concessions. So FASB issued the Q&A. They had a board meeting, and the staff spoke about COVID-19 and lease accounting, and then they issued this formal document referred to as a staff Q&A. And it really simplified what companies have to do related to lease concessions under COVID-19. So there's really two different methods that are allowed, and then there are variations of each, but in general terms, the methods include using lease modification guidance, or using the guidance that existed for leases that had enforceable rights to lease concessions, which basically gave companies permission to treat all lease concessions related to COVID-19 as variable expense. And so that, again, really simplified the process. It made it so companies don't have to scrub through every single lease looking for that clause. And really, there are a few caveats. One was that the total amount of rent to be paid under the contract, the old contract and the new revised contract, including lease concessions, total amount of rent should be the same or less. And also, the companies need to be consistent in the way they apply the relief. No cherry picking as usual in applying accounting standards, but need to have some consistency in the way the relief is applied. At least to leases with similar characteristics. Okay. Now, related to software, the lease accounting software should be able to handle either of the methods that are allowed by FASB, and really the key in the efficient flow of this information through software comes down to accounting for lease components versus non-lease components, and fixed lease components versus variable lease components. Just to summarize what you should look for in software related to this is, if you go down a path of lease modification, the lease administration team should be able to make the modification as a modification to a lease component, and that should automatically trigger a evaluation by the accounting team for the lease accounting schedule and include the opportunity to remeasure the right-of-use asset, lease liability, and all that should be automated through the workflow process. No double entry between lease administration and lease accounting. Now, on the flip side, if your company makes the election to account as if the enforceable rights existed, and basically go down the variable expense path, then that should be an option in the software, and that should not trigger lease accounting workflow. In other words, it should be a very simple process to modify the rent, flag it as variable, and that will process via your AP rules. But again, no lease accounting impact there. And that workflow, again, should be automated in a lease management, lease accounting software. There are a few other items related to lease modifications and lease concessions, as we see leases changing as a result of COVID-19. And so I wanted to touch on a few of these key issues that really, they're always relevant to lease accounting, but perhaps even more relevant during this time. And so the first one to touch on is the reassessment of leases and remeasurement events. And so I put a quote from 842 here, and it says, "The lessee shall reassess a lease term or a lessee option to purchase the underlying asset only if at the point in time that any of the following occurs." And one of the following is a significant event. Of course, COVID-19 has been a significant event, but it goes on to say, highlighted there, that was within the control of the lessee. Now, I'd say obviously COVID-19 not in the control of our lessees. So what this means is if you've made assumptions about lease term, particularly in ASC 842, that you're reasonably assured. You have to decide if you're reasonably assured, and to exercise an option to renew or terminate a lease. And this same guidance applied under ASC 840 if you're still reporting under 840. This is not a situation where you have to go back and reevaluate that assumption. However, the next logical step, if you've said you're going to renew and now you are not going to renew, or you may not be reasonably certain anymore, that doesn't mean, that by itself doesn't mean you change the schedule and remeasure. However, when the date comes and you actually process the paperwork or notify the landlord of your intent not to renew, that is the time that you would remeasure the lease. So just something to be aware of here in the guidance. While it's not an automatic reassessment or remeasurement event, many times the items and circumstances have been put into play that will ultimately require the remeasurement. And the point here from a software perspective is just that the accounting software should be able to follow your accounting policy to remeasure the schedules and automatically record the journal entries in the general ledger. Another key variable related to lease accounting is the discount rate. This is really vitally important now, much more under ASC 842 than it has been under ASC 840, because virtually every lease now has a liability that's being discounted and then amortized over the term of the lease. And we're seeing some variability in discount rates as a result of just the whole economic environment right now. Part of the equation is fiscal policy, at a national level, and of course interest rates have been trending lower as a result of that, and then also the lessee's capacity to borrow comes into play in and that's part of the definition of that incremental borrowing rate. But one hot topic right now relates to negative discount rates. We have some companies that interpret the definition of an incremental borrowing rate to perhaps include a situation where there could be a negative rate. Now, that's something I'd advise you to speak with your auditors about, but it's something that a lease accounting software should be able to handle. And that now we're seeing more and more automation related to this. You can see the screenshot that shows matching. This is automated functionality. Just an example of the way a company can just enter the terms of the lease. So based on the dates, the lease term will be automatically calculated, and then based on geography and currency and other parameters like that, the incremental borrowing rate can be automatically pulled in. So just another example of automation that is helping in this environment. The cell phone picture here is just an example from our blog. You can find that at CoStarManager.com, and this is an article that I wrote just explaining one of the more common practices that I've seen regarding calculating the incremental borrowing rate. So feel free to take advantage of that if you like. One more topic related to calculating lease accounting, the fair market values basically comes into play. It's most relevant really for the determination of operating lease versus finance lease. It's one of the tests. We used to call them the bright lines test. Most people probably still call them that, but one of them relates to fair market values, and this is something that you can get some value from a lease management software as well. You can see here on the screen that you can obtain some research data related to real estate comps. Very basically here, don't want to spend too much time on this, but very basically you can use fair market value and real estate comp information to help you meet the requirements for the operating versus finance lease test. And if you can get that right out of the lease accounting, lease management software, it can save you a lot of time. Okay, Jess, I think that brings up our next question.
Great. Thank you so much, Matt. This is our second poll of the day. This one will help us get a better idea of our attendees who are on the line. So this one says, which of the following best describes your company and status for ASC 842 lease accounting transition? The answer options you'll see here are non-public company, fully transitioned, non-public company, preparing for transition, public company, fully transitioned, or public company not yet transitioned or is having problems after transition. Just like our first poll, please take a few moments to select your answer. Again, this is our second of 4 polls today. We'll leave this question up for a few more seconds to give everyone a chance to answer, and then we'll have Matt make a few comments before moving on. This is a friendly reminder to please submit your questions for Matt, and we'll try to save a couple minutes towards the end of today's session to address your questions. So please go ahead and make your final selection here. Reminder, you can scroll to the bottom until you see the submit button, to submit your answer. So please go ahead and select your final one here. And what we'll do now is go ahead and take a look at the results. Let's see here. It looks like the most popular answer with a little over 40% is public company, fully transitioned. Matt, any thoughts on how the attendees have voted for our second poll of the day?
Yeah, that's great. Really a pretty broad representation here. For public companies, of course, the deadline for ASC 842 for most of you has already gone by, and for non-public companies, you've got some extra time here. I think the key the key thing here, if we had an opportunity today for the non-public companies to ask their colleagues at the public companies, what's your biggest lesson learned? I think without a doubt we would hear a theme. The public companies would say, we wish we had started sooner. And so I think that's something that I'll just relay here. I've heard that over and over and over. With lease accounting transition, it's not our main focus for this webinar, but with transition going on, in the midst of this, there's just so many things that companies have to consider. It's not a simple, select a software solution and plug and play. There are so many accounting policy decisions that have to be made. You have to consider which practical expedients under ASC 42 you want to utilize. You have to set policies around how you're going to collect your leases. In many cases, people are pulling leases out of desk drawers and file cabinets, that haven't been tracked before. So it's a process, and really almost unanimously, I'd say companies wish they had more time. The ones that are fully adopted now, I wish they had started sooner. But that being said, there are hundreds of companies, that are successfully running 842 schedules and booking journal entries, and it's business as usual now for these public companies. So the advice is to get started as soon as possible, but know that companies have been very successful with ASC 842, and there is a light at the end of the tunnel. So moving on into some more ramifications from COVID-19, we really are going to talk about some of these in the middle of the presentation here, which are just kind of facts, not exciting. You can see here it's a partial termination, right? So in this case, we're basically making a decision. Companies are deciding that they need to scale back in certain locations, or with certain leases, and so this is something that's just a fact these days. I think we can think about this, a lot in terms of office space, right? I mean, we see that in the news all the time these days, that some companies are reevaluating their utilization of office buildings and perhaps moving, in some cases, to more of a remote workforce or reduced schedule. Maybe some people come in on one day and then the next group will come in the following day, things like that. And so while a lot of this is still being hashed out, there's already some trend towards reducing space in certain locations. So ASC 842 provides a couple of different options for that. It says you can, as you make this decision, certainly a way for companies to save cash. But as you account for it, you're always pretty much going to have a change to your lease liability, and that's always going to be based on the net present value of the future payments. But then the change to the right of use asset is not quite as cut and dry. You can actually have two options there. You can change it proportionate to the amount of your change in your lease liability. And the key there is proportionate. In many remeasurement events, the right of use asset, the dollar amount changes based on the dollar amount of the change in the lease liability. But here it's proportionate, so it's a percentage type calculation. Then you can do that, or you can change it proportionate to the reduction in your space or the reduction in the use of the asset. And so just something to watch out there if you're considering a partial termination on a lease. And in this case, the software should be able to remeasure the schedule, record the journal entries, and document your workflows and approvals associated with this. And this is an example, again, because the amount of the reduction in asset and liability will not be the same, you're going to want your software to automatically post a gain or a loss associated with the partial termination. Now, another reality is impairment. ASC 842 generated and continues, as people adopt, continues to generate large numbers of right-of-use assets on books, and these right-of-use assets are subject to impairment testing guidelines, and so we're starting to see some companies seriously consider how COVID-19 will impact their impairment testing. Of course, there's been some business disruption. Some businesses have fared really well online in light of the quarantine type situation. People just preferring to shop online. So, of course, brick and mortar could be something that you consider locations for impairment. And happens when a right-of-use asset is impaired under ASC 42, particularly for an operating lease, the pattern of depreciation of that right-of-use asset changes. And we won't go into a huge amount of detail on this, but for an operating lease, you end up still with one level amount or straight line lease expense amount under a typical operating lease. And that's really made up of a combination of interest expense and depreciation expense on the asset. And it's all combined into one number. You get the same number that you had under ASC 840, straight line amount, under a normal course operating lease under 842. Now, when you impair the right-of-use asset, you actually switch to a straight depreciation or a straight line depreciation amount, which then, when it gets combined with interest expense, you end up with a non-straight lined rent expense amount. So just something to look out for there, and consider if you're in a situation where you need to impair a right-of-use asset for an operating lease. But this is something that should be automated in the lease accounting software solution. All right, moving on to full termination or abandonment. Sometimes this is the case, right? Sometimes the lease has a termination option, and sometimes it doesn't, but it still makes sense to leave or abandon an asset or close a location, something like that. In the case of a termination, if that opportunity exists, there should be an opportunity to remeasure that in the lease accounting software. There can be termination fees involved. Generally, there is some type of termination fee, and depending on when you make the decision and when you have to pay the fee, the remeasurement can be slightly different. But all that should be set up in the lease accounting solution, and a automated track should be provided. The abandonment situation is a little bit different because you're not able to terminate the lease, but typically you're going to be in a situation where you still have the liability to make payments. Just the asset might be either impaired all the way to zero, or in the case of a lease, you may still have some value associated with your asset. But in any event, the lease amortization schedule under ASC 842 will change, and the software should be able to provide a track for that. And this is one example of something that you'd want to be able to see in a roll forward report. Many of you have probably used roll forwards in the past and had auditors request those. Typically, it comes up quite a bit related to fixed assets. Under FC 840, many times the auditors would need this for the capital leases. And now under 842, it's become even more high profile because operating leases and finance leases are on the balance sheet, and the right lease asset and lease liability both can be presented in a roll forward format, which basically just presents the opening balance, everything that was added or taken away, any changes that were made, and the ending balance. It's not a reconciliation, of course, because there's really no support here as far as why these changes happen. It is a walkthrough or a roll forward of what has happened, and this should be available in the lease accounting software, and it should be available at a detailed level, so it's easy to when auditors make a selection. And typically, in my experience, they would select some key leases, provide me a lease number, and then ask me for a roll forward. And this is an example of software makes that something that can happen in a matter of seconds. You don't have to go through complex, general ledger downloads and pivot tables and all that to produce this. It can just be exported at the touch of a button. Okay, so moving on, I think we have another polling question.
Absolutely. Thanks so much, Matt. This is our third poll of the day. This one says, which best describes your organization's experience with lease accounting software for ASC 842? The answer options you'll see here are fully satisfied, comprehensive functionality, somewhat satisfied, adequate functionality, unsatisfied, poor or lacking functionality, or finally none, have not adopted ASC 842 software or reuse Excel. Just like our other two polls, please take a few moments to select your answer. Again, this is our third polling question of 4 of the day. We'll leave this question up for just a few more seconds to give everyone a chance to answer. And just like our other polls, once we close this question down, we'll share the results and have Matt make a few comments before continuing on. I've seen some great questions start coming through, so friendly reminder, please continue to submit those to Matt. We'll try to save a couple minutes to get to as many as we can before we close out today's webinar. All right, please go ahead and make your final selection here. And what we'll do now is go ahead and take a look at the results. Looks like the most popular answer here, just by a bit, with about 39%, is we're either using Excel or have not yet adopted ASC 842 software. Matt, any thoughts about our two most popular answers here?
Yeah, absolutely. I'd say, again, we've experienced a lot of success with public companies adopting ASC 842. At CoStar, we rolled out the solution for ASC 842 in the first quarter of 2016. That's when the standard was issued, and so now we've had over 4 years of experience, and hundreds of companies have used CoStar to comply with ASC 842, and it basically it just gets better and better all the time because of the experience of these of the public companies that already had to adopt. So for I'm assuming that most of the 38% here are non-public companies, and really the silver lining there for you guys is that you've got options now that have been vetted quite extensively by your public company colleagues and certainly by all the major accounting firms at this point. So we're happy to help you as you enter that transition. moving on to some cash recovery opportunities. So this is something that we're seeing a lot about, even in the news, and as we have discussions with our customers and our colleagues at Big Four and other accounting firms are having discussions with their clients. We hear a lot about cash recovery and even ways to generate more cash. Basically streamlining and right-sizing the lease portfolio can really affect this. And it's a time where companies are really looking to preserve cash and even add cash back into their businesses. So I'll just go through some of these and give some examples of where I've seen them in play, and also mention some opportunities where technology can help. So the first one up here is refundable security deposits. This is something, in my experience, oftentimes when things are good, perhaps you're in a stage of high growth, security deposits are made. Many times they're refundable, but companies, real estate departments, lease administration departments, and accounting teams, you're all running so fast, making deals and accounting for everything. Sometimes these security deposits get overlooked because they're all different. In many cases, there's different terms. Maybe after a year you can get it back. Maybe you don't get it back until the end of the lease, or maybe it's just a few months and you can request to have it back. But generally, you have to initiate that. It's not something that the lessor is just going to cut you a check. And so this is an opportunity, and especially now, if you're looking for a source of cash, it'd be nice to know how many of these refundable security deposits are out there. Another one is unpaid tenant improvement allowances. Typically, we hear this referred to as TIA, or incentives. Lease incentives sometimes is another term for it. But basically, this is where a landlord provides some type of incentive. Usually, it has to relates to the build out of the space or something like that, where the tenant or the lessee will put a certain amount of money into improving the asset that's been leased, and then the lessor will pay them back. So this is an opportunity. A lot of times this is managed, I'd say, a little bit more closely than security deposits, just because these amounts are usually larger. However, many times companies are not reimbursed fully for the tenant improvement allowances, and something else that could be skipped over and may provide an opportunity. Previous overpayments of rent. Now, believe it or not, this has come up quite a bit, and I even have some examples, from my own experience at large corporations where leases were overpaid over a period of years, and only when we started consolidating data into one location, putting it into one database, and then tracking the clauses associated with leases, could we identify that rent had been overpaid. If you're in a process where you have a rent roll, and you basically just apply what you did last month to this month and just keep rolling it forward, this is kind of a high probability, that you may have, one or two or maybe even many leases that have been overpaid, and typically lease language will require you to remedy that. But again, the lessee is probably going to need to initiate it. It's not something that lessors typically will notify you of. Maybe a large, sophisticated lessor might. But let's be clear. not all lessors are large and sophisticated. Some maybe just one person or one family. Could be even heirs, of a family, and you send your rent to multiple people every month, and they're trusting you, the lessee, the corporation that cuts them checks. They're trusting you to get it right, and if you've been overpaying, you may be able to receive some recovery. CAM reconciliations is another classic example of a place where lessees overpay. The key here is that they're complicated, and generally they're different among your group of landlords, and so either a significant amount of time has to be put into these, or automated solution can be considered. But I've seen this as a source of extra cash. Co-tenancy violations. We talked about this a bit early on, but this is where either an anchor tenant leaves or or occupancy drops below a threshold, and you can receive some money back from the lessor or received in the form of reduced rent going forward. Sometimes companies switch to a flat, revenue sharing or percentage rent agreement in the case of a co-tenancy violation. So this can be another source. Force majeure clauses or enforceable rights to lease concessions. Covered that pretty extensively, but certainly another chance. Probably the main opportunity that we're seeing in the marketplace now. And another one here is evergreen fee. So this is where leases go to month-to-month status. And this particularly comes into play with equipment leases. So if a piece of equipment has gone through its full scheduled term under the lease, a lot of times there's a clause that say at the expiration of the term, you're in evergreen status or month-to-month status, where you just keep paying indefinitely until you either turn the asset in or maybe in some cases you don't even have to turn the asset in. You just have to terminate the lease. So companies oftentimes find that they've been paying month-to-month status for years and years related to assets they don't even use anymore. So those are the issues, and I think I mentioned some of the opportunities there, but how do you really maximize these opportunities? And I think the answer there is clearly by organizing your data, organizing these clauses into a lease management system. There you can have an electronic lease abstract. Everything can be in the same format. You know exactly where to go to find your force majeure clause, for example, or you know exactly where to see if your lease is in month-to-month status. Standard reports can certainly help with this. Ad hoc reports, to the extent that you want to look for one particular clause, and maybe even layer in a date range. You can do that with ad hoc reports. Critical dates, always key. You don't want to miss an opportunity. What if you have decided to terminate a lease, or you'd like to know if you can terminate a lease, but then you miss the deadline for the termination option, right? Critical dates are so important in managing leases. Email alerts can be set up in a software. You can manage contacts. For example, we've heard a lot of companies sending out a request to almost every landlord, requesting rent concessions. A lot easier with contact managers or contact manager functionality in the software. And another thing is the integrated market data that we talked about before. We looked at it before in terms of the fair market value information, but market data related to your locations can also help you understand if there is a co-tenancy violation. So, I think it's important to note here that just because you have a co-tenancy clause in your contract doesn't mean that you automatically are going to save money. Typically you have to notify the landlord of your intent to exercise that clause. And if you don't know that you have a co-tenancy clause, or if you don't know that an anchor tenant has left, or if you don't know that occupancy has dropped below a certain threshold, you can't save money in that circumstance. So the software, lease accounting, lease administration software can really help you dial these opportunities in and take advantage. Okay. Now, I think I've saved you might call it the most exotic transaction for last. It's not really exotic at this point, but this takes a little more work. But sale leaseback transactions have become a bit of a hot topic again recently. I flash up another excerpt from one of the blogs. I wrote this regarding transition to ASC 842, and you can see that on our website. But basically, the point of the transition considerations around sale leasebacks is that to the extent that you had a gain on a sale leaseback, you may have to recognize that immediately upon transition from 840 to 842, and many companies were surprised at that because ASC 842 has been widely touted as having no impact on the P&L, and this was one of the rare cases where it actually did. And some companies had major reductions, or gains associated with sale leasebacks. That was being amortized over the term of the lease in 840, and so every month they got a reduction in their rent expense. And then when they moved to 842, they took the one-time favorability, but the result was that their straight-line expense amount actually went up for those leases. So something to watch out there in transition. However, sale leaseback transactions actually present a nice advantage these days, a nice opportunity to bring some cash in, and sometimes this can be pretty major. If you think of it in terms of a very large real estate portfolio, or perhaps some marquee locations that you own that you could perform a sale leaseback transaction on, that could generate some major cash. And one recent trend that we've seen, and it really does coincide with this environment after COVID-19, is sale leaseback transactions are being performed more and more related to equipment. So a lot of cases before, this was widely used as a real estate tool to unlock cash from a real estate portfolio. But again, now companies are looking to their equipment portfolios and evaluating if a sale leaseback transaction may be the right call. So the insights here from an accounting standpoint is just that you have to apply lease accounting guidance, and if you do this for hundreds or thousands of leases, assets which become leases, software can help you out a lot here. Okay, the final point that I'll make before we move into our last polling question is just that you want to check with your accounting advisors. You want to check with your auditors about the ramifications of COVID-19 and applying any of the items that I talked about today. Some things are rapidly changing. Companies are making policy decisions, as we speak. And so definitely get with your accounting advisors about any decisions you choose to make. Also, just understand that people working from home, there can be information delays, particularly between lease accounting, lease administration. So always check in frequently with your teammates. And now I think we'll move into our final question.
Excellent. Thank you so much, Matt, for a really great session today. a lot of really good examples in there that I think the attendees will find very valuable. So thanks again. As Matt just mentioned, this is our fourth and final poll of the day. This will help us, follow up post-event and see where we can get you the most valuable information. So this one says, which topic would you like to understand in greater detail? You'll see here discount rate automation, retrospective remeasurements, roll forward report, or lease accounting reassessment events. Just like our other three polls, please take a few moments here to select your answer. As a reminder for those attendees seeking credit for today, you'll need to answer 3 questions. This is our fourth and final one. Leave this question up for just a few more seconds here, and then maybe we'll have Matt make a quick comment before we go ahead and wrap up today. We are at the top of the hour, so we won't have time for Q&A today, but please continue to submit your questions, and we'll be sure to have Matt or a member of his CoStar team follow up post-event so we can get those questions answered for you. All right, please go ahead and make your final selection here. And what we'll do now is go ahead and share the results. Matt, maybe not surprisingly, just given the topic today, about 40% want to hear more about lease accounting reassessment events. Any thoughts here?
Yeah, absolutely. I think that is very timely. And then we also see a lot of people interested in retrospective remeasurements, which really ties into that information delay slide that we looked at the last slide. And, they kind of go hand in hand. When information is delayed, sometimes you have to make true-up entries, and those true-up entries can be automated, which can save a lot of time in the process. But thank you so much, Jess. Thanks for moderating today, and thanks everybody for joining us.
Absolutely, and I want to leave this last slide up here for just a moment. Matt has his contact information if you're interested in learning more, so please take a moment and go ahead and jot that down. I want to say, again, a big thank you to Matt for a really insightful session today. Thanks again to our partner CoStar for making today's webinar possible, and of course, a big thank you for all of our attendees for joining us today for Leasing in COVID-19, cash flow opportunities, and accounting considerations. We did have a few of you ask, so just a friendly reminder, a PDF of today's slides can be found under the resource list section of the interface. Thank you again, everyone. Stay safe and enjoy the rest of your day.